So how are you doing?
I'm good. I'm good. How are you? How are you?
Good, good. Good to meet you. Yeah. So tell me, Yash.
Yeah, great. Hi. So thanks for meeting me. And
Yeah.
this is a great opportunity for me to ask like a lot of questions. Basic ones though, but still a lot of questions.
Yeah.
Anyway, yeah. So how do you wanna start?
Nothing, whatever is on the top of your mind, like just you can give a background if you like that you have in terms of investments, if you're making current investments. Um, yeah. And yeah, then we can, and then from there, if there is something that you are looking to optimize or something, we can take it forward
Mhm.
from there.
Yeah, makes sense. So I'm 24 right now. I
Hmm.
have been doing my main profession. My profession is basically animation. I am an animator. I'm working in an advertisement agency right now, where
Hmm.
I do social media ads, TV ads if need be, web ads, and other animation related tasks. Apart from that, I love films and anime actually.
Hmm.
And then, yeah, so about investing, because that's the main topic here. I
Hmm.
started back when I was 20. I started off with like zero knowledge, and I was like, okay, what to do, what can be done. I had a senior in college who started off with that.
Which
And
one?
so I started investing from there with just like some little money here and there, maybe a mutual fund here and mutual fund there. So now I have some. So now I invest in crypto, not a lot. I invest in gold bonds. I have invested in multiple independent scripts, and I also have mutual funds. So it's not a. I don't really know if it's a good portfolio as such, and I don't really know if it's a good division that I've made. Like if it's like it has a lot of variety or not, but it's just something that I've built with what little knowledge I've had. And yeah, so that's where I'm at right now. What I would like to optimize is a couple of things. One, I have no idea what FNO is, and that is a part that has always interested me. Not necessarily because I want to make money out of it, but just because like that's something that has interested me for the longest time, and I've just found it very confusing to even get a hang of the concept, and after the concept to get a hang of how to actually, in a day-to-day world, do it. For example, it's very easy to buy scripts. It's like buying, let's say, anything, like buying a football. You pay money and you get it, right? But for some reason, I've always found futures and options a little confusing that way because I don't really understand what I'm actually buying. And that is something that I would just love to know. So I have I have a list of questions here if you can
Yeah,
see.
yeah, yeah, yeah. Sure, 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 sure.
So
Yeah, so
yeah.
sorry. So to answer that part of FNO, it's very, very easy. So say for example, let's say for example, you want to buy a house.
Hmm.
Let's say I'm a seller of a house and I'm planning to sell that plot for rupees 1 crore.
Hmm.
And you believe as a buyer, potential buyer, that this plot is worth 1.25 crore. All right.
Okay.
And you can easily you're a part of the industry, you're active in this industry, and you believe you can easily find a buyer for 1.25 crore. This person is making a distress sell or making a sale in urgency. You don't have a buyer today, but
Hmm.
in the future, let's say a month later, you believe you will be in a position to have a buyer arranged for this. So what do? You come and meet me. You give me a token amount. All right. So let's just say you give me 1 lakh rupee or 5 lakh rupee. You've given me some token amount saying that I'm interested in buying this. I'm interested in taking delivery of this property a month later, and I will have the capital arranged to you. And in case I cannot have the capital arranged for you, then this token amount is yours.
Okay.
So let's say you have paid me 5 lakh rupees against that 1 crore rupee house, and I am waiting for at the end of the month that you will buy the house for, or someone is going to buy the house for 1 crore. And if that is not happening, I am keeping the 5 lakh. All right. Now what happens is you indeed manage to get a buyer for 1.25 crore. All right. You send 1 crore to the seller. I am happy. I have given the possession of the house away, and you pocketed 25 lakh. So what did you just do here? You basically invested 5 lakh into a scheme and you managed to get 25 lakh, right? Which means this premium that you paid, or this token money that you paid, is what we call as premium in the FNO market. And
Okay.
with this premium, what happens, it gives you the right to take the delivery. You can take the delivery if you want, but you don't have to take the delivery, which means that you gave me the 5 lakh rupee under the assurance that you would take a delivery worth 1 crore rupee at the end of the month. You could not arrange 1 crore rupee, or you felt that I made a mistake in assessing this particular plot. It is not worth 1 crore rupee. So now you have given me the 5 lakh rupee. You don't have the moral obligation of taking delivery. Your 5 lakh rupees elapsed,
Okay.
right? So what did you get in the process? In the process, if it worked, you got 25 lakh on the 5 lakh. And if it didn't work, you lost the 5 lakh, right? So this giving a deposit amount for a particular stock in the market is called as options.
Okay.
This is called as options. So say, for example, there is a stock trading at $100. You believe this stock is pretty undervalued at $100. It should be trading at $125 by next quarter. So there is a lot size of, let us say, 1,000 or 10,000. You know 10,000 into 100 would obviously be about a million. Now you have two options. Either you buy the full stock by paying the million, or you simply pay a premium. And that premium is called as an option. And you buy the stock option, which is basically giving a token to the existing holder of that stock, that I promise to buy the stock at this price in the very minimum. So what is that owner getting? He has assured that if the stock is currently trading at CMP, this is definitely going to sell at 100 rupees at next month, regardless of where the stock actually goes. So eventually, if suppose the market is to fall or something, if that stock is to fall, or if there is a board meeting which I as the seller feel is not favorable, but you as a buyer feel is favorable, I'm protected against that loss, because I made the transaction with you in advance for 100 rupees. And you paid me, let's say, 5 rupees. So which means you would have bought 5 into 10,000, which is you would have given me 50,000 rupees as deposit against a delivery. Now, what happens if the stock actually goes to 125? The advantage of the stock market is you don't have to go outside to look for a seller, which is what we discussed in the first example. That in real estate, you actually have to physically go and find a buyer. In the stock market, you don't have to physically find the buyer. If the stock is indeed trading at 125, the option will factor in the change in price. And if no one buys that option, in the end, the exchange will buy that option from you at the settlement price. So did you understand that? So let's say, for example,
I got a little confused towards the end. That is a question that I had in my mind as well. What happens at expiry? Like, do I buy like, for example, if you're saying that a lot size of 100 for, let's say, idea at 1
hmm,
rupee is 1
hmm,
lakh, 1,000.
okay.
Sorry. But,
Take a better example. Just say there is a stock like which is valued at 100. So an average. So let's say I'll give you an example. Nifty has a lot size of 50, and
okay.
it is currently valued at 20,000 plus.
Hmm.
So 15 to 20,000 rupees is basically a 10 lakh rupee, 1 million rupee position. All
Hmm.
right. If you have to buy a Nifty option,
Hmm.
all right, you could buy it for as little as 5,000 rupees, 1,000 rupees,
Hmm.
depending on
Okay.
the type of option, which means even here they have given you types, which I will explain later what the types are. But the general concept is that if you are buying the option as a call option, which means you are saying, I will take delivery a month later, the only reason you're saying that is because you believe the price will be higher a month later.
Hmm.
And the option gives you the flexibility of not having to take the delivery, but rather just trading the option itself to someone else.
Hmm.
Now, the question becomes, let's say, for example, you bought on the first of the month with an expiry as 31st of the month, say, for example, and you achieve a fair value on the 15th of the month. You are satisfied. You can sell the option to someone else in the market. That's not a problem. Let's say you hold on right up till the 31st of the month, right up till 3:29 p.m. and you
Hmm.
hit market and you hit it sell. The exchange has to buy it. That is, it is the right, it is the responsibility of the settlement agency to actually settle the contract they issued. So, which means that you only have to focus on the change in price of the instrument, not focus on whether someone will actually buy it or not. Whereas if you are working in the real estate broking industry, or if you're trading physical bullion, gold, silver, any product or commodity, you are actually seeking a buyer, and that process makes it slightly more expensive. And therefore, in this industry, you will have higher charges on taking delivery as compared to the stock market. Is this making in principle sense to you, that this is basically an option, is basically a token money that you are giving in order to take delivery of a security a certain period later, while fully retaining the flexibility of actually taking the delivery or simply trading the option off?
Okay, so let me just summarize this in my mind, and let me just say it out loud so that just correct me if I'm wrong anywhere. So, for example, I paid 5 rupees for a option. I
Hmm.
traded it. I got a profit of, let's say, 10 rupees or whatever. I then bought it back again so I sold it at 10 rupees, and then I bought it back again at 15 rupees, let's say.
Okay.
This is the option. This is not the underlying value of
Not the
whatever it
underlying.
is trading. Right. So it
Yeah.
is the actual. So now that 15 rupees again is what you would call the premium, right? That's one
Yeah.
thing that, okay, great. Now the other thing is, let's say this option was of the first and it's expiring on the 31st. I never found a buyer for my 15 rupee purchasing price. So I have so now I have the option at that point of time. Now I have two questions. One, I if I'm not able to find a buyer, that 15 rupees is gone, right?
No, that's not possible. If the exchange issues, see, the difference between your crypto and our stock market is what?
Hmm.
That the stock market is regulated, it has a settlement agency. The
Hmm.
crypto market does not have a settlement agency,
Hmm.
which means if today a million coins are issued and tomorrow no one wants the coin, you can't force it to anyone.
Hmm.
But if the exchange is issuing a option contract, the
Okay.
exchange will necessarily settle it by the end of expiry. That's not even theoretically possible.
So necessarily settle it means that they will buy
Which means
it
that
from
let's
me.
assume, yeah. So let's say, okay. So let's just say, for example, there is a stock which is valued at 100.
Hmm.
All right. Let us say you believe that the price of the stock will rise. So my question is, what you believe that the price will rise. So what will you buy? Will you buy a call option or a put option?
I'll buy a call option.
Correct. Which means a call option gains value if the underlying gains value,
Yeah.
right? So the underlying is currently valued at 100 rupees,
Hmm.
right? So my question, and let us say this is the first of any month. Now my question is, what should be the fair value of the option 100 call? Like the option at the strike price of 100. What should be the fair value of that option? The stock is valued at 100.
Okay.
Correct. And
Hmm.
so question is, what do you think would be the value of the 100 C of that stock on the first of the month?
Um, the value of the premium.
Yeah, that's the value of the premium. But what it should be the fair value of the premium? It should be
Okay.
zero. It should be zero. I'll tell you why. Because the stock is at 100, the call option is at 100. Correct? That's the
Hmm.
fair value of option. But in practice, when you go to buy, you will see that the option is priced at rupees 3.
Okay.
Yeah. The question is, why are they charging you rupees 3? Because first of all, so they are giving you this first of all, they're guaranteeing you the settlement. Okay. Secondly, there is an ongoing interest rate that is there in the market. They're charging you an interest. Okay.
Interest on what?
Um, See, आपने उधारी लिया है ना market में.
Oh, like that.
You,
Huh, huh.
you don't have the 100. You only have the 5 or the 3.
Right. Yeah, yeah, yeah.
But you're
Huh.
taking custody of an instrument which is valued at 100. So what is the so the settlement agency who has issued this particular contract to you has charged you a premium in order to guarantee the settlement that is going to happen, the underlying interest rates, the general market demand for that particular contract. All these variables are factored, and the option is priced at rupees 3 at the start of the month.
Hmm.
Now my question is, let us say the stock doesn't move at all.
Hmm.
So the stock remains at 100 rupees only. And we have reached the end of the month. That's the 31st of the month. So my question is, what do you think is the price of that option now?
Zero, because nothing
Zero.
happened.
So which
Yeah,
means exactly, which means what did the option buyer risk? The option buyer risked the premium.
the 3 rupees.
The 3 rupees is what the option buyer actually risked. Okay.
Hmm.
And why did he risk it? He risked it because he did not want to place 100 rupees in the market,
Hmm.
because he wanted to take on a contract which is liquid, legal, will be settled, etc. He doesn't, or she doesn't want to go and find a buyer separately for this contract. That is, you don't have to call up your uncle and say, please buy this contract from me.
Hmm.
Okay. There will be someone in the, it's a marketplace where everyone is bidding for that contract. All right. So in other words, you have finite risk. All right. Someone who could sell the option to you was guaranteed the price. You know, the exchanges who are charging your premium are guaranteeing your settlement. All right. So the contract by itself is quite complete and
Hmm.
useful for the purpose of taking a concentrated bet on a position that you
Hmm.
like. Yeah, it's
Hmm.
because it's going to be expensive. So I hope you understood this point that what
Yeah.
are basic issues.
So in practice, basically, what would happen is, suppose I am investing in in an asset worth 100 crores, and I'm
Okay,
paying only 1 crore as a premium, right?
correct,
Now the thing is, I'm only risking that 1 crore rupees.
correct,
Which means that by the end of the month, if I'm not able to sell it, that 1 crore is gone
correct.
because I couldn't sell it. But I am not obligated to buy that 100 crores worth of asset
Covered
that's
property.
underlying. That is something that the exchange will do.
In the case of the exchange, the beauty is this, that let us say your contract, you paid a deposit of 1 crore,
Hmm.
and you feel that you risk the entire 1 crore.
Hmm.
But on the 31st of the month, if the fair value of your option contract is rupees 50 lakhs, the exchange will give you 50 lakhs. So you would have lost only 50 lakh.
Ah,
That is
okay.
called
So,
that's called the settlement process. And the reason why you're doing this is because with 1 crore rupee, you could participate in a piece of land or a stock which was valued at 100. Now just imagine if that stock jumps by 5% in the month,
hmm.
right?
Yeah.
So that 100 crore stock becomes like a 105 crore stock. So you just made 5 crore on a theoretical maximum risk of 1 crore
Hmm. Yeah.
from your
Yeah.
perspective. And that is how the option traders are actually calculating their ROIs, that how much did I wager and how much did I eventually get. And therefore, the real metrics in the market for evaluating success typically hedges around risk adjusted returns, not percentage returns. Because here you are seeing 1 lakh rupee or 1 crore rupee position gave you 5 crore rupees. So you would be very excited in saying that I made 400% returns.
Hmm.
But that's not the correct statement. That's the statement is not correct. You were in an instrument which was leveraged, and that underlying moved up by say 4 or 5%, and therefore you made leverage returns of that 4 or 5%.
Hmm.
Yeah. Is this part of it reasonable?
Yeah.
This is the justification for existence of options in the industry in the first place.
Okay.
Yeah. And then obviously because of the very safe regulations, the environment is very secure. There is no question of theft. You could lose your money, but no one is robbing you of your money.
Yeah. It's basically you have chosen to risk that money,
Just
and you
that
have
capital.
calculated a certain risk, and you have thought, okay, if I'm risking 1 crore, I am assuming that if what I'm planning goes, then I'll earn 5 crores from it. That is what you mean. So the risk to reward ratio is like 5:1 if I'm
Yeah,
thinking
in
of it
this case,
correctly. Yeah. Hmm.
this is a subject of other discussion, which perhaps maybe when you spend a few years actively trading,
Hmm.
people, should I go for 5:1 risk reward with a low probability of it succeeding? Or should I go to a 0.1:1 risk reward? That is, I'll book if I see I risked 1 crore, I'll book if I see 10 lakh.
Hmm.
But I'll do this very often. All right. So people have modified their behaviors in order to realize the objective, which is to maximize their risk-adjusted returns. It depends that the model with which you found, let's say you found some stock like Reliance, you found Reliance at a value bet. The model which gave you Reliance as a value bet, is it also giving you another 50 stocks as a value bet? That will govern how often you take the position. That will govern how, so there are, then the maths gets involved in all
Hmm.
of this. Which means that when you're taking one transaction at a time, it is reasonable to look at the percentage changes in your account. But when
Hmm.
you plan to implement it as a way of structurally
Earning.
making money, then you have to visualize the impact of running these cycles so many times, and what happens when there is sort of an alignment or a confluence of too many negative patterns. Is your system designed to withstand it, etc.? So all of a sudden, you basically become a probabilistic statistician or a thinker or an individual who's thinking in terms of ranges, and
Hmm.
you're taking a bet there. And the reason for being in the FNO market is basically because, let's say you have a full-time career in advertising or animation or media and broadcasting. So it could take, say, 5, 10 hours, 15 hours of your day to
Hmm.
exit, or say 50 hours a week, 80 hours a week. It depends
It
what
actually
you
does
work.
take 15 hours a day.
Yeah, like some doctors could be having like 100-hour weeks, etc. Now,
Hmm.
everyone, they may or may not love their job, they may, but everyone obviously enjoys a certain security of income depending on where they are placed in life. And let's say salary is a good security of income, and you have achieved that, you've reached a certain level where you can't leave it. But it's there, the security is there, and you are finding time and energy in order to start another business. Then compared to any other business in the world, be it selling tea, running a pan tapri, having a departmental store, running a restaurant, uh, compared to any other business in the world, direct trading in the stock market is the most efficient way of making or losing money. If money is your core concern, that I want to basically create an additional income source. So I'm making XYZ money. This is secure income source. I'm getting rental from this property, that is secure income source. I might inherit this property, that is secure income source. But I, the individual, wants to create speculative income sources or business income sources, that there is a chance that my 100,000 rupees or my 1 million rupee could really give me a lot of cash and could significantly alter my life. So, in order to achieve that result, many people start businesses. But businesses are very tough. It is basically testing you on your administrative acumen, on your ability to sense the markets, that is the business market that you're working in. Then there are so many challenges related to taking physical delivery, documentation, accounting, GST filing. It means hundreds of things come up when you are setting up even a small business. And if you find yourself short of documentation, you'll find yourself on the side of making penalty payments. Uh, in worst cases, you're bribing just to get out of trouble. So a lot of stress in a business, a lot of stress even in FNO trading. But the difference is here is that the FNO trading stress is the stress that a chess player has. Like the only thing that concerns him or her is the position on the board. You don't have to worry about any other administrative hassle. So it is
Hmm.
truly a business. It is a skill based business, and like all skills in life, you can practice and become better. So therefore, there is an interest in pursuing FNO trading from many individuals who are currently employed. In fact, even I was employed only.
Hmm.
So
Yeah.
I started my job in 2007, and I was working right up till 2019. So there is 12 years of employment, and I started trading in 2015. So 2015 to 2019, approximately 5 years, 4 years of trading later, I could figure out that, okay, I have sufficient understanding of the process in order to look at trading as a dominant income source.
So while you
Yeah.
were these 5 years, you were still working.
Yeah, I was working since 2007 till 2019. I had done my MBA in between, but broadly speaking, since 2007 to 2019, I was working. And till prior to 2015, I had no experience of the market except a mutual fund here and there, etc. But
Hmm.
I didn't even have a demat account. And
Okay.
just like you, know what is an FNO. FNO, matlab, I didn't know it even existed actually. I didn't know that. I
Okay.
used to know like how my friends would say, "Udhar lots ka game hota hai." Lots ka game. Okay, so they called a lot and game. That's it. So that I did not know it is called future and option.
Hmm.
So say it was right at zero level only, but then it took around 3 to 5 years of working on the process to give me not just profits, but to give me confidence to be able to take that decision, take the step forward. In other words, your behavior should obviously give you profits, but it should instill a sense of confidence in you that you are a responsible adult here. And only then, only then, once you have confidence, my argument here is that people allocate capital in the proportion of their confidence in a system, not in the proportion of returns. So you will find a realtor allocating money in the real estate market only whether the real estate market is in a downtrend, uptrend, it
Okay.
doesn't matter.
Because they
You
have
will
more confidence in it.
more confidence, they have an understanding of how that system works,
Hmm.
right? For example, I could say that a toy shop owner, he or she already knows that 90% or 80% of their sales are going to happen around Diwali and Christmas. But
Hmm.
it's not like they're only a toy shop for 3 months and then they're selling other general stores for the remaining 9 months.
Hmm.
So
Hmm.
and when what happens when this person, the toy store owner, makes money, he invests in toys only, because how you make money instills not just money, but it instills a sense of confidence. And therefore, your behavior from the first day, it might not be a profitable behavior, but it can still be a good behavior, a behavior that instills confidence.
Hmm.
And that behavior can be refined with certain practices that you can include in your day-to-day life, in your trading methodology, in the way you manage your money, in order to optimize your potential returns. It's possible theoretically to do it.
Okay. Okay. Now, since you mentioned something in the middle, and this is one of the questions that I had, and I actually commented on your videos also about it, is that you said about developing the right skills, right? Now, if I were to do this, what are some resources that you would suggest? Like, where do I look? Because I have been looking on YouTube everywhere, but the thing is, it's all scattered and I have to like collate it, which I'm fine doing. It's just that I would love to know like certain places that you found really helpful that I should look at. Like, for example, yesterday you mentioned, no, in your last video, you mentioned the book by Steve
Steve,
Neeson.
candle
Now,
beyond candle.
Beyond Candlesticks, right?
Yeah, I think so. That's the name of the book. But if you Google Steve Neeson, you will 90% of his material will be on candlesticks because he actually went to Japan, spoke with the Japanese traders, because candlesticks origin is from rice traders in Japan.
Okay.
So the words that you see that are used in candlesticks, for example, in the last video, I mentioned something like bullish harami, bearish harami. So
Hmm.
obviously, because I'm using harami as a word, so some friend said, "यार मुझे तो सिर्फ harami harami सुनाई दिया." I'm like, that's the nomenclature because in Japanese, apparently it means pregnant, it means a fetus. So what
Okay.
happens is typically after a very large candle at a pivotal low, if you see a small little candle which is completely enclosed inside that large candle, then it is said to be like a mother baby and a new
Okay.
generation kicks in. So that's how they. But now, it's very. I didn't feel like creating a YouTube video to explain that because
Hmm.
that is all available in Steve Neeson's book. So
Yeah.
he makes it a very interesting story, like how he find it. So it's just an academic read also, and so yeah. So coming to your question of what are the resources that a person should access, what are the resources that I accessed actually? So first step that I would like to tell you, and through you, the objective is to air it so that a lot of people of a similar demographic have their questions answered. That's the point of this exercise. So I'm slightly critical when it comes to using YouTube for pure education.
Hmm.
Right? I'm very critical about it. It should be seen as a talk show, right? Education largely is a process of internalization because you have to apply that thing and your life is going to hinge around it.
Yeah.
Right. Your decision to quit your job, your decision to maybe allocate more money, your decision to talk to a friend and say, "Aja market mein." I did that a lot. It's the best place ever. So here I would like to sort of tell people of your generation, be more responsible
Hmm.
in how you source your information, right? This is all free stuff, right? Uh, so first step would be that if it comes to education, do educate yourself the way you have traditionally been doing, that is through books.
Books, yeah.
And when it comes to books and static written content, why I'm saying static written content is because you need to see it in front of you. Uh, then you need to visualize it. Then when you need to identify it when it actually occurs. So it's a process basically. It's a 3-4 stage process when that happens. So it's not like often what happens is when you are taught new immersive theory, your performance immediately dips after that because your system is getting adjusted to what it has just learned.
Hmm.
And this is almost certainly going to happen. And this is an indicative actually that your system is not thinking how you thought earlier. My argument here is that only traders who experience losses
Hmm.
create trading systems. If you feel Infosys is going to rise, you buy Infosys and it runs. You feel Reliance is going to rise, you buy Reliance and it. So why will you create a system then?
Yeah.
Okay. Only because I strongly felt Infosys was going to rise. I strongly felt maybe some bank was going to rise and it didn't rise. Where I was then asking that what happens if I again strongly feel something like this today? So I had 5 lakh rupee and I lost say 50,000 rupees out of it. Because I'm say 30 years old today, but maybe someday I'm 60 years old and I have my entire retirement corpus. And if I develop this kind of conviction, I'll come on the streets at that age, right?
Yeah.
So therefore, systems, the requirement of system is basically to address your behavior in and around losses. And the best way to create a system is truly to experience losses. Very often people are trying to create a system before they have even gone into the market. And I'm like, if you do not know what is failing, what are you going to if I do not know the leak is because of this screw or that screw, then how can you operate the full engine,
Hmm.
right? So now, so coming to the point, first step is to be more responsible about how you source your information. And here I would recommend books.
Hmm.
I have in several in several podcasts or even in my video, I have recommended books that I have read multiple times, but it doesn't mean that those are the only books I read.
Yeah.
So I picked Dr. Alexander Elder's books. He had a couple of them, Welcome to My Trading Room, etc. There are some of these titles are there because my phase of studying the market was between 2015 to 17. So we are literally speaking almost 10 to 8 to 10 years after my education
Yeah.
phase. So I am so don't it should not be like कि आपने ये नाम बोला था ये नाम नहीं था, but it is somewhere around that, Dr. Ale. So it's not like I'm seeing the books now,
Hmm.
right? Like I actually find like Dr. Alexander Elder in his book will say use the EFI as the oscillator, and I did not like the oscillator. So which
Hmm.
means I had this entire process of questioning what he's writing.
Hmm.
Like it was not like he said I use EFI with sensitivity 2, so therefore I mean therefore what? I would work on the formula of EFI. Then next thing I would under EFI ka full form is Elder Force Index, and ironically the author of the book's name is also Elder, surname is Elder. So there's a clear agenda, right?
Yeah.
There is a clear agenda. So tomorrow, like my name is Sahil. So tomorrow I'll create some Sahil stochastic. So
Hmm.
logically, I will come out and write a book and I'll come out on YouTube and say that this stochastic is the best in the world.
Hmm.
All right. So it is your responsibility to actually break it down and to see why he or she is making that claim. And is it making that in isolation or is he using some 3, 4 other variables along with it? Is it becoming the best in the world? So it's a, it's similar to reading a book on chess. There is nothing enjoyable about it. It is a continuous process of thinking only,
Hmm.
and it's tiring. So Dr. Elder's book, Steve Neeson's books. In fact, if I have to simplify it, I would say if the viewer of this show simply Googles Wiley Productions, Wiley, okay, Wiley Publications. Sorry, they are like a Tata McGraw Hill equivalent publication, and that publication you could be reasonably sure, like whether it is LA Little or whether it is any author who's coming in that publication, the quality of his work, the publishers have done a good job.
Hmm.
So you could literally just say ki, this person is saying these 3, 4 books. All right. And again, in addition to books, I would also say that if there is like you have to visualize that if you have to be one of the best traders in the world, because if you're profitable, you are one of the best traders in the world.
Okay.
If you have to be best traders in the world, you have to know everything. This is something that should be a mindset at the start. Later on, it is not going to be. So you have to be little voracious, little hungry towards seeing. Now, let's say I am saying use stochastic. So you have to know what is stochastic. Someone is saying use MACD. You have to know what is MACD. Not that कि वो cross करेगा तो ये होगा. At
हाँ.
least initially, like you remember how we studied sine squared theta plus cos squared theta equal to 1, and our entire lives we have never applied it,
But it's still
right?
good to know,
But
and you
but
should
but
know.
it's still good to know. It shapes your behavior at that time, right?
Hmm.
Now, extremely weak students could never figure out that sine and cos were essentially ratios of a side of a triangle,
Hmm.
you know. Uh, but through rote practice and I was one of them. So through rote practice and hard work, we could still memorize it and go ahead and deliver it. And we found ourselves applying our minds to many other more complicated things, which simply using that, हाँ मेरे को ये याद था, trigonometry मैंने कभी किया है या मैंने maths. So same approach. अगर RSI का formula दिया है, no one is going to test you what is the formula of RSI. But why should you not know it?
Yeah, that makes sense. That
Why
actually
should you
does
not?
make sense.
Why should you not know what the RSI is measuring?
Hmm.
ठीक है, just because it is under 30, so it means I should buy. No, that is your abbreviated understanding. Much like how people say कि गीता में तो ये बोला है कि कर्म कर फल की चिंता मत कर. I'm like, that's a very convenient this thing, and it usually comes from a person who has definitely not read the book.
Hmm.
I can guarantee you, if he has given thought to the book, he'll be like, "Was this is not the only thing, or this is certainly not the essence of it." The
Hmm.
essence of this conversation between two legends, where one legend is saying, I have everything I need,
Hmm.
everything I need. So why should I fight? And the other legend is saying, since when has it become about you? It is not about you that you have everything you need, so therefore you will not fight, or because they are your brothers, so you will not kill them. It's nothing about you, man. What is a soldier supposed to do? So it's a real conversation between legends. To just say that, one line mein usko karke, I feel it is belittling a lot of intelligence, much like how saying this, ki RSI, fast stochastic, slow stochastic, if they intersect under the 20 level, you have to buy. I think that is making it too simple, simply to make things convenient.
Hmm.
But
While
yeah,
I
but I
don't
think
understand these terms, and I will understand these terms in
you will understand them in
the
a week,
future, but
and
I get what you're saying.
yeah, you will be misled to feel that this works now, because there are hundreds of examples where it works.
Hmm.
But I am saying that your job as a student is not over with profit or loss. While
Hmm.
you are a student, you have a sense of duty towards learning it like a student. And currently, I'm not saying that our education systems are the best, but the exposure that we have had is all that we know. So study it like how we studied it in school. If there, imagine that there is going to be an exam, RSI पे लिखिए 5 mark के लिए, MCQs are going to come. Think like that.
Hmm.
Okay. Then I feel that individual is technically getting better, and a long journey, but over a period of time, it becomes theoretically possible for the person to really become profitable. And the reason for becoming profitable in trading is the same reason that someone would want to play cricket for India. Literally, uh, I feel that towards the end of a trader's career and towards the end of one of the best athletes' career, a trader is going to make more money. Like a trader, like
Yeah.
Virat Kohli, someone their trading careers will be like still 35, 40. Traders' career will be till they live. I feel a trader will earn more than professional athletes. So yeah, so I think we are run out of time,
Yeah, that.
and yeah, so we can we can discontinue for now and connect later also.
Yeah, yeah, yeah. Sure. Yeah.
Sure.
Okay.
All
Thanks,
right.
Sahil. It was I genuinely have more questions now, and I hope
That's
to
the
talk
next.
to you again sometimes.
Sure,
Yeah.
sure, sure, sure.
Okay.
Great.
Yeah. Okay. Yeah. Bye bye. Thank you.